looking through various articles and blogs, everyone seems to be talking about kind of shooting for goals and making a certain percent per week, or making a certain dollar amount per week or month or year, etc. What do you think the best way to kind of set goals for your trading?
It's probably, that's a very good question, and it's probably, the way I approach it is probably going to be a way that you haven't probably thought of. And I always try to look at it from the risk perspective. So how much can you afford to lose every day or every week or every month, right? And the reason I say that is because most people want to look at, oh, how much money can I make, you know? And again, I always come back to, if you want to trade just to make money, you're not going to enjoy this business, because you'll be frustrated by the amount of time and the needed patience needed to wait for the right trade and wait for the right setup. So I rather talk about how much can you afford to risk as a trader by either percentage or dollars, and then kind of fit a program around that, where you are establishing then how much will I risk in a day before I stop trading for the day, is one way to do it. Or you can say, I'm willing to risk X percentage over a week or a month. And if you hit those numbers, you have to be disciplined enough to say, I'm done. I'm going to stop. I'm going to reset on the 1st of the month or the 15th, whenever it is that you run your month. Once you do that and set that risk, then you can kind of work backwards. And what I mean by working backwards is, you can say, let's say you have a couple $100,000 that you're trading and trying to speculate in the market with. So you're going to be in and out more than you would if you were buying and holding, but you don't want to be too active necessarily. And really the way that I like to look at it is, if you're you really need to look at the volatility of the vehicle that you're trading. You need to look at the average true range of the vehicle that you're trading. Is that expanding or contracting? And then from there, you're able to kind of set the risk around kind of what is a typical move in a day for the NASDAQ versus, say, oil. Oil may trade, its average true range may be $1.50, which is 3% wide. So an equal amount in the NASDAQ right now would be 180 points. So $1.50 and 180 points are the same thing percentage-wise, but you may have better opportunity if they're both giving you 3% to try to trade the NASDAQ, because it's easier to pick a slice of 180 points than it is $1.50. So at the end of the day, you really can't have expectations on what the market can give you either. And that is really, it's kind of a strange thing, but you can't come in and say, I expect to make X a day, even if you've established risk, because every day we don't know what the market's going to do. So if you're looking at a market over the course of a week, and let's say over the course of the week it's 300 points wide in the Dow, for me, the way I've always looked at this and the way I've established success purely on the numbers that I've been able to pull out of the market is, am I within my risk? Have I kept my risk in check? Number one. Number two, if the market was 300 points wide in a week, and that just means the high to the low, it could do this 20 times, but 300 points was just our absolute high and low for the week. Then the way I like to gauge my success on something that I'm trading is, if I took 1/4 of 300 points or 75 points during that week, I grade myself A+. Anything down to 0 is still passing. So if I had 0 points in the week, it's still a C. Let's say I was trading and made some money and gave some money back, but I didn't lose. As long as I keep that kind of above ground, I'm going to be successful over time. So that's the way that I like to do it. Whether it's a month time frame, I like to look at the range of where the market's been, and can I take at least 1/4 of that during the day, week, month, year. So if a market is 400 points wide in a year and I take 100 of it, I'm going to be hugely successful. Next year, if the market's 800 points wide, I'm going to need to take 200. So it is all reflective as far as how you're going to do in how the market performs itself. We can't make it move, but the wider it moves, the bigger opportunities we have. So when you start searching through what do I want to trade, this is a great approach because it establishes risk. You kind of know what the typical daily range is. And when you start to expand beyond that range, you should be concerned. In other words, if we're typically 3% wide and all of a sudden we're 6, it's probably a good time to fade an extended move, or think about, oh, something changed and this market is in the process of going to a new price level. So maybe you should pause and caution. So by doing some homework and establishing what the risk is first, then you can establish kind of some backwards looking goals on taking profits from the market. Hi, Matt Davio. Obviously, as a 5-minute trader client, you get your daily video delivered to your mailbox. And a lot of our customers will say, well, that's been great. I'm making a lot of money with the ideas. I'm really understanding the risk. Matt, could I spend some time with you? Can I spend an hour with you? Can I spend a day with you? And that is absolutely on the table to discuss. Drop me an email again, matt@OneMinuteTrader.TV, and let's talk. Let's get on Skype. Let's pick up a phone call and see what you want to get out of it, and see if we can come to an understanding that would work for you and work with my time frame.